I wanted to start by painting a bird's eye view of the European airlines, and wanted to do it first by the number of passengers per airline over the past 20 years. It's interesting to note that all airlines, with the exception of SAS, have grown the number of passengers transported from 2006 to 2024. In 2006, top three players accounted for 52% of the passengers transported. And in 2024, the same three players accounted only for 34%. The number one spot has been claimed by Ryanair, which went from 10% to 19% over this period. It's important to note that these numbers are imperfect, as they include long-haul passengers. And this makes Ryanair's share and Ryanair's advance in share artificially low. Market share of Ryanair in short-haul European air travel is significantly higher than the 90% present. This growth, airlines are famous for being a fire pit of investors' money, and in general, in European airlines, the story has not been different. Growth has been capital intensive. This is an extremely capital-intensive industry, and we can see that the cost of this growth was borne by the shareholders. You can see number of shares going up for all of the, say, major five competitors to Ryanair over time. COVID definitely did not help, but we can see that in the past 20 years, IAG number of shares went up by more than 4 times, Lufthansa almost by 3 times, EasyJet also by 2 times. In contrast to this, Ryanair's share count has declined by a significant amount, and this happened while going from number 4 to number 1 in market share. So this is quite peculiar. Secondly, capital-intensive growth needs to be funded either through share issuances or through debt. And we can see here that all the major groups carry on debt, and they typically rely on leases. We can see that Lufthansa owns 88% of their planes, but also has almost 3 times leverage. Wizz Air owns none of the planes and has more than 4 times leverage. In contrast to them, Ryanair runs with a net cash position, and Ryanair owns 96% of their planes. 96% of their planes, and the remaining 4% are Airbus planes, 26 of them at their Lauda subsidiary. So Ryanair has managed really to achieve this remarkable level of growth while having a pristine balance sheet and very high ownership of the planes. And here we can see a really longer-term picture of Ryanair's profitability. Blue bars are invested capital, gray ones are capital returns measured in dividends and buybacks, cumulative over time. You can see return on capital employed. Year by year, it fluctuates quite widely, but on a sort of 5-year rolling basis, we can see that in times of stress for the consumer and financial stress, like we have seen in 2020 and we've seen in 2008, these returns got to below 10% on a 5-year rolling basis. But when times are better, these returns go all the way up to 30% in terms of return on capital. And this is all happening while growing very significantly their fleet. And I'm putting an emphasis on this, as this will slightly change in the coming years. And so the natural question is how do they do it? Like, how do they, in an industry which is so grueling, has been grueling for so long, how do they deliver such spectacular results? And I think the answer is that they have taken a simple idea. They haven't invented low-cost flying. This was invented by Kurt Kelleher at Southwest, and Mike O'Leary took his ideas really seriously and understood that the customer wants a low price, that air flying is a commodity service, and that in order to deliver it, they need to lower the unit cost. And in order to be around and to avoid the path dependency that leverage brings, they need to own the planes and they need to have a pristine balance sheet. Most importantly, they understood that, of course, there cannot be any compromise in terms of safety. Ryanair has had a spotless track record in terms of passenger safety or the accuracy of the planes. Planes have been coming on time, number one in Europe for many, many years. And in order to keep this operation going so smoothly, there had to be strong culture. Right? This strong culture was spearheaded by Mike O'Leary since the late 80s. Mike O'Leary has been the CEO. Basically, he started as a CFO and has been CEO for 3 decades. And he owns 4% of the shares. These shares are worth today about 1 billion euros. So he has very much skin in the game, but he's also, he hasn't received these shares in some sort of compensation recently, or he hasn't received these shares in order to be aligned. No, this person has true alignment, and he has built this company, and he's built it through phenomenal, rinse and repeat efforts. We can go into all sorts of anecdotes of how Ryanair instilled this culture of low cost in their employees, which goes even today. For example, it goes into how Ryanair markets. Ryanair's Twitter account is pretty famous for being edgy and funny, but this is one of the ways how Ryanair chooses to have a cheap source of marketing compared to other airlines which are more keen on spending money. Ryanair always wanted to think from a clean slate and wanted to find the cheapest but safest solution. So when we go into the unit economics of this business, it's usually we do it via RASK and CASK. Right? RASK are total revenues of the business, which include the airfares and the ancillary revenues divided by available seat kilometers. Available seat kilometers is a measure of how much basically kilometers were covered by the planes of Ryanair. And the same goes for the cost. And in the cost, we include all the financing costs, but we exclude the corporate income taxes. And when we compare Ryanair to the other airlines, I don't want to say peers because they don't necessarily compete. Ryanair competes frequently with EasyJet and Wizz Air. They do fly some routes with British and IAG and Air France and Lufthansa, but these are less directly comparable peers. We can see that Ryanair is making the highest margins in the industry, even in the last 12 months, which weren't the best, the 12 months for Ryanair. And we can see that Ryanair's cost inflation was lowest among its peers since 2019. We can also see that Wizz Air appears to have unit cost advantage, but I would note that this is largely driven by lower fuel costs per available seat kilometer. And they are able to have lower fuel costs per available seat kilometer due to longer flights that Wizz Air has on average. And longer flights are more fuel efficient because there's a lot of fuel burned at the beginning and the end of the flight. So on a per ASK basis, Wizz Air flights are more efficient. And also Wizz Air pays less in ETS credits, the CO2 emission credits, compared to Ryanair, because ETS scheme is the scheme which applies intra-Europe, intra-EU, and because Wizz Air has more flights that are out of EU going into EU or from EU going out of EU, where another significantly cheaper scheme applies. Wizz Air has a slight advantage there. And I would point you to look at how Wizz Air has entirely lost its pre-COVID profitability. And this was due to multiple forced and unforced errors from the engine issues that they're currently facing and have faced for some time, to an unforced error of unhedged oil exposure that really hurt their balance sheet. Next section I wanted to touch on is overall supply side of this industry in Europe, and wanted to show that even though the headlines on a quarter-to-quarter basis in this industry are very much about demand, about fair pricing, about oil prices, bigger picture, there is no significant airline that launched in Europe since Wizz Air in 2004. And in 2004, Ryanair was too weak to really strangle it in its infancy, because if you think about how this industry works, it's all about route competition, right? So if there was a new airline that started that Ryanair thought is a serious competitor, Ryanair would sacrifice competition on the routes where they compete with the new entrant and really hurt them by lowering the prices, by funding these costs from routes that are profitable. So new competitor would face extremely difficult task compared to 2004 and Wizz Air's entrance. New competitor would be much more slot constrained. There would be significantly more aircraft constrained, as we'll see in the next slide. And also they would be competing against Ryanair, who can have really capacity to throw at a certain route if a new competitor was emerging and if this route was strategic for this new competitor. Very significantly for the supply side are, of course, Boeing and Airbus having a duopoly in this industry. And Boeing deliveries have never recovered to pre-COVID levels. We can see them at some source of 340 versus 800 in 2018. And currently, both Airbus and Boeing have more than 10 years of backlog. This backlog is not going to Europe as much as it was historically. And a new entrant into this industry would really struggle to get their hands on the plane at an affordable price. And of course, it would be impossible to compete with Ryanair, who bought their planes in size at moments of the greatest stress in the industry. But one exception to this reduction of incremental supply in Europe, don't get me wrong, the industry will keep on growing, but it will grow at a slower pace than it was growing for the past 10 or past 20 years.